Yep, I've been there too, buying gold and silver bars in order to protect against inflation with the imminent end of the world seemingly right around the corner. And now, as a reformed stacker, I've learned that gold and silver bars probably aren't the best investment, especially when you look at the recent times in 2022 when inflation is at an all-time high, but gold, for example, relative to the US dollar is down almost 10%. So if gold is supposed to be a really good hedge against inflation, why, when inflation is high, is it not performing well? Well, I'm gonna get into all the details of that in this video, but before we do me a favor. If you wanna thrive financially, you're in the right place. Go ahead and hit that subscribe button. And if you feel so inclined at the end of this video, hit that like button so more people like you can see it. Okay, so in order to start this conversation about whether physical gold and silver is a good investment or a good hedge against inflation, I want to start by doing two things. First and foremost, for those of you who are about to say in the comments, gold isn't an investment, silver isn't an investment, let's define investment real quick. An investment is defined as the act of putting money, effort, time, etc. into something to make a profit or get an advantage. So in other words, if you are trying to get an advantage over the US dollar or any foreign currency for that matter, you are making an investment. You aren't just buying gold in order to have it maintain the exact same value as what you bought it for. If you wanted to do that, you could go and get a poker chip at the casino, which by the way, is a lot easier to redeem than physical gold or silver, but you're trying to gain an advantage over the inflation and the US dollar in all likelihood. So let's just put that myth to rest. This is an investment. It's not just insurance. It's not just a hedge against inflation. It's an investment. And one of the things you have to consider when you are investing is the opportunity cost of not investing in other things. So when we look at gold, we have to compare it to stocks. We have to compare it to bonds. We have to compare it to all the other things you could possibly buy. And it's true that there is a better hedge against inflation than gold and silver. And that is more often than not stocks. But we'll get into that in a little bit. Because when you look at any investment, you have to look at the opportunity cost of not investing in other things, including things like stocks, bonds, cars, whatever it is you want to look at, including things like poker chips, which are going to be worth $100 today, tomorrow, the next day, a year from now, 5 years now, or 10 years from now. So now that we've established that this is an investment, and it is an investment, let me tell you my story as a reformed stacker. So back in 2011, I bought a whole lot of this stuff, gold and silver bars. In fact, I bought a ton of it. The reason I did so was because I was reading an investment newsletter that started off all about value investing and slowly started to shift to a more fear-based newsletter. They started talking about things like buying cryptocurrency so that the government couldn't spy on you and where you were spending your money. They started talking about buying gold and silver as a hedge against inflation or the imminent crash of the US dollar, which 11 years later still hasn't happened. And as a general rule, they just started using fear tactics in order to sell products. Now, their primary product was information, but the information on buying value investments just wasn't selling the way they expected to, so they shifted to selling information on things that were more in the fringe. Now, having trusted this organization and having done really well off the recommendations that they provided, I followed suit and blindly started buying silver and gold as they suggested I do, which led me to have a really big stack of this stuff. And it was only after several years and me suggesting to several really intelligent people that they should be buying physical gold and silver as well, that they pointed out to me that if I couldn't figure out who the sucker in the room was, or the sucker who was reading the newsletter was, then it was probably me. So I started doing a little bit more research into the realities of buying gold and silver. And what I realized was that in order to hedge against a whole bunch of risks, which were the collapse of the US dollar and the collapse of the economy, which had actually happened in 2008 as opposed to 2011 when I started buying this stuff, I had gone and created a whole lot more risk for myself by buying gold and silver, keeping it at home in a safe, and basically opening it myself up to a whole bunch of other risks, which basically included everything from losing it to having it stolen and not having it insured to basically having a higher cost of storing it by putting it in a bank safety deposit box. There was all these risks that I had created for myself by basically buying this physical thing that I thought was going to be a good investment and was also going to protect me in the event that my dollars became worthless. Now, it was pointed out to me that in an economic collapse, the last thing that people want is gold and silver. It doesn't become a new currency. In fact, what generally happens when you have a country's currency collapse is they shift to another country's currency, a foreign currency, or they shift to a barter system. So in other words, people trade goods and services for other goods and services. They don't go around trading gold and silver bars. It's just not something that happens. In fact, you would be better off to buy things like bullets, things like water, things like gasoline, things that are in really short supply during an economic disaster. And we've all witnessed what people actually value during times of economic uncertainty. Things like flour and yeast and toilet paper. Think back to the pandemic when everybody was out searching for the vitals, not necessarily gold and silver. And I can't emphasize enough that if the US dollar did go to zero, or the Canadian dollar went to zero, or the British pound went to zero, people would not be looking for silver and gold. They'd be seeking other currencies or things like real estate and other assets that have value to pretty much everybody. Because things like gold and silver only have value to a very small percentage of the population and places like central banks. Now, in addition to its lack of value during a currency collapse, there's also the fallacy that inflation is a really good hedge against inflation. Yes, over the long term, and we're talking 30, 40, 50, 100 years, gold tends to be a really good hedge against inflation, but over the short term, it doesn't. And you can look at no other time than right now in order to prove this, because currently inflation is at extremely high levels, yet gold prices have not been doing particularly well. In terms of the US dollar, it has decreased by over 10% so far this year, which contradicts the overarching perception of gold as an inflation hedge. Now, one could actually argue that gold is a better hedge against the US dollar than it is against inflation, because when the US dollar is weak, gold tends to go up in value significantly. But when the US dollar is strong, like it is right now, gold tends to go down in value even though inflation is high. And this isn't the first time that inflation has been high and gold has gone down in value. For example, between 1980 and 1984, gold lost about 10% of its value every single year. This is when inflation was at 6.5%. In 1988 and 89, gold went down by 7.6% per year, and inflation was 4.6%. So both of these periods were highly inflationary, but gold took a tumble. But hold on a second, Nolan, you're cherry picking those dates way back in the day. What about the last 20 years? If you've owned gold for the last 20 years, you've done exceedingly well, especially against the S&P 500. Well, that's the whole problem with this gold versus inflation conversation, is if you cherry pick certain dates, you can create a case for anything. But if you look at long-term averages, it gives you a completely different story. So let's take a look at the last 20 years. If you were to suggest that gold has outperformed the S&P 500 over the last 20 years, you would be absolutely correct. But you have to keep in mind that during this period was one of the biggest financial crises we have ever faced. And if you listen to pundits who are selling information and they suggest that you buy gold because of this, well, they aren't giving you all the information that you need. So let's take a look at what happens when you actually cherry pick the numbers. So first and foremost, if you had owned gold between 2000 and 2010, you would have done very, very well. In fact, if you've owned gold since 2000, you've done well compared to the S&P 500. But what happens if you take out those 10 years during the economic meltdown and take a look at the numbers from there? Well, as you can see, gold hasn't performed over the last 10 years quite as well as the S&P 500. In fact, if you go back to the beginning of the 1900s, the S&P 500 has exceedingly outperformed gold. Because over the long term, gold is essentially a really good hedge against inflation in the fact that it only goes up by 2 to 3% a year. And even in the years like between 2000 and 2010 that perform exceedingly well, there's almost always a return to the mean. In other words, periods where gold and silver perform exceedingly well are usually followed by very, very, very long periods of time where they don't perform as well. Now, that's not to say that there isn't a place for gold and silver in somebody's portfolio. In fact, I still own gold and silver in my portfolio, and more than just these two little bars that I kept as a reminder of how bad of an investment physical gold and silver is. No, gold and silver play a really important role in balancing a portfolio. In fact, I own 5 to 10% in physical metals at any given time. And I know you might be surprised by this, but I now own them in an ETF that stores and maintains the gold for me, so I don't have to maintain it myself. This also gives me the added benefit of being able to sell it quickly when I want to rebalance my portfolio. Because like I said, it's a lot easier to get rid of this, the casino chip, than it is this, the physical gold and silver. Oh, and by the way, when you buy physical gold and silver, you pay a premium when you buy it and you pay a premium when you sell it, usually to the gold dealer. They don't sell it to you at spot price. Now, some might suggest, well, if you're buying or selling gold, you should be doing it in the private market so that you can reduce the premiums. Well, I'm going to tell you right now that buying physical gold and silver on the private market is exceedingly dangerous because most people who are getting into this don't know how to determine if something is real silver or real gold. And do you really want to try your luck at learning how to determine whether something is real on something that sells for $1,600 an ounce? I don't think so. So being able to hold it in an ETF makes it significantly easier to liquidate, and you also don't have to worry about storing it and getting taken advantage of. By the way, the reason I kept this one bar is because I did indeed get it taken advantage of. I was sold a lower value bar by a dealer who, when I returned to sell that same bar to that dealer, told me it was worth less because of the particular brand. So it's really easy to get taken advantage of, especially when there's only usually 1 or 2 dealers for gold and silver in every major city. Now, people will tell you if you don't hold it, you don't own it. Well, that's just not the case. If you own any stock, bond, ETF, yes, you may not have a physical piece of Apple or Coca-Cola or any of those things, but your ownership is fairly secure. In fact, in my opinion, it's just as secure as owning physical gold or silver because you don't have to worry about things like theft or loss. And by the way, a lot of stackers bury their gold and silver in their backyard. I think the idea of burying something that's so valuable in your yard is absolutely ludicrous. So here's the thing you have to realize. People who are telling you to buy physical gold and silver are usually just trying to sell you a product. Whether it's information or whether it is the product itself, you have to be aware that pundits who suggest that you buy physical gold and silver in order to hedge against the absolute catastrophes that are really highly unlikely to happen are there making money off of the fact that you are buying their information. Whether it's clicking on a link on YouTube or whether it is actually buying the physical gold and silver from their companies. There are far safer ways and more convenient ways to own this product. And the reality is you also shouldn't be buying more than 5 to 10% worth of your portfolio in gold and silver anyways, which for a lot of people that would mean 2 to 10 ounces would be more than enough. So is it really worth having 2 to 10 ounces worth of gold buried in your yard or in a safe or in a safety deposit box when you can simply have the value of that in a secure and insured trading account, which you can easily sell and get in and out of, which is especially useful when you're trying to rebalance your portfolio. By the way, one of the ways that we use the silver and gold in our portfolio is we use it to rebalance. So when things like stocks go down in value and gold goes up in value, what we do is we sell a little bit of our gold and we buy a little bit more stocks. Because what we want to do is we want to keep the balance of that 5 to 10% in line all the time. And the really great thing about having gold and silver in your portfolio, even though it may not be physical, is that it has a tendency to fluctuate far less than stocks and bonds do. In fact, the value of gold and silver usually has a negative correlation to stocks and bonds, which makes it a really great hedge against those two things, probably a better hedge in the short term than inflation. So I'm not here to tell you not to buy physical gold and silver. If you think it's cool, if you want to own this stuff because you like having it and you just feel really safe about having it, go ahead and do it. That's a decision that's totally based on your risk tolerance. But if you're doing it because you've read something somewhere or listened to something somewhere or watched a video somewhere and you're scared as a result, then it's probably not the best investment to buy. There are far better ways to invest and there are far better hedges against inflation than physical gold and silver. Like I said, if you're doing it because you think the end of the world is coming, buy bullets, buy water, buy gasoline, buy toilet paper, buy flour. Don't think that this is going to be your savior in the event that something bad happens. Oh, and if you want to know more about why you just shouldn't buy physical gold and silver in general, check out this video, which I'll link right here.